So I'm Luke Alexander, President and CEO of Newcore Gold. Newcore Gold, we're listed on the TSX. We also trade on the OTCQX in the US. We're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics. 2026 has a lot of catalysts for the company. We are in the midst of a 45,000 meter drill program, so we're aggressively drilling across the project. We're also going to talk about how we're taking the project from a PEA to a PFS. And I think that will create a very strong fundamental re-rate for the company and ultimately command a higher multiple from the market. So we're expecting 2026 to be a very busy year for the company. Drill results, as well as a major catalyst, which is taking the project from a PEA to a PFS. I'll jump straight into it, but before I do, I will highlight that I will be making some forward-looking statements. I'd encourage you to go to our website and have a look at that. But also, while you're there, I would also encourage you to look at some of the material that we've got on our website, as well as sign up for some of the social media platforms that we're involved in. X, LinkedIn, Facebook. We put a lot of very valuable content out there, which we've had very good feedback on. So looking at Newcore in a bit more detail. So first and foremost, we've got a proven management team who are truly aligned with shareholders through our 15% ownership in the business. This is equity that we've bought alongside shareholders over the last number of years. So there is a true alignment between shareholders and the management team and the goal of creating real shareholder returns. We did put out a PEA in 2024. We're now in the process of taking that from a PEA to a PFS. That PEA did outline very robust economics, and I'll talk a bit about the re-rate that we expect to come as we de-risk the project through that PFS stage. And we are based, as I mentioned, in Ghana. It is a tier 1 jurisdiction to be operating in. We've got a number of multi-million ounce mines, 5 million ounce plus mines sitting along trend from us. So we think at this stage with our district scale exploration upside that we've really just scratched the surface. And Ghana is a country that's got a government who is truly aligned and keen to see projects being built. In terms of my background, quickly, I spent the first 20 years of my career on the investment banking side of the business. I was in London for 12 years, covering all the big global natural resource funds out of the UK and Europe, advising different ASX, TSX, London-listed, primarily mining companies. That's where I got to know the bulk of the team involved in Newcore today. These individuals have a track record of creating significant shareholder value, and a number of the companies that we're involved in are listed here. In terms of capital structure and corporate snapshot, we've got a tight capital structure, about 260 million shares outstanding. As of the end of September, we had about $11 million in the bank. But important to highlight that we've got 19 million warrants, or almost 20 million warrants, that today are well in the money. We've started to see the proceeds from those warrants coming in. And once they're all exercised, we'd expect another $10 million to come in. So one way of looking at the company is we've got, $10 million, $11 million at the end of September, with an additional 10 million coming in. So that will potentially allow us to expand our drill program well beyond 45,000 meters, as well as start to look at some of the work that we want to get done on the back of completing our PFS. Important to highlight that everything we're going to talk about today is fully funded from that 11 million of cash that's in the bank. We don't require any of this additional warrant proceeds to complete our 45,000 meters of drilling, as well as complete our PFS. So very well funded from that perspective. I would encourage anyone who's watching, if you do have a relationship with any of these investment banks, I would encourage you to go and get the research that they've published on our company. A lot of very positive views in terms of our Enchi project, the management team, and ultimately the upside potential for Newcore. Over the last 5 years, we have really built our institutional ownership. We've built it from about 0% to 55% today. You'll recognize a number of these institutional shareholders. These are deep-pocketed, long-term focused mining investors who obviously see the tremendous upside in our project, as well as the fundamental re-rate that we expect to come with that PFS that we're going to put out next year. And then I'll just reiterate the fact that management and board, we own 15% of the company, so we are truly aligned with shareholders from that perspective. Looking at Ghana in a little bit more detail. So Ghana is Africa's largest gold producer, sixth largest gold producer globally. It's got a very supportive government in country who want to see mining projects put into production. Mining is important for the economy. It's important for the tax base. And for us at Newcore, it also means that there's a lot of highly skilled labor in country for us to leverage off of to move our project forward. What we always say, though, is don't listen to me, single asset, biased CEO, but look at what the major mining companies are doing in Ghana. You've currently got 4 of the top 10 largest gold producers in country, including Newmont, Anglo, Goldfields, and most recently Zijin, who's come into the country. They all have significant operations there, and this highlights that it is a tier 1 jurisdiction to be operating in. If you look at Newmont specifically, they've just invested another $1 billion into Ghana, and they highlight that they're a HAFO project, which sits along the Sefwi-Bibiani belt from us, is one of their cornerstone assets in their global portfolio. So again, Ghana is a tier 1 jurisdiction, and we're very fortunate to have amassed a large land package when we did, and now have the ability to aggressively explore across that project, but also de-risk our project towards a PFS. So in terms of where our project is located, I'll just take a step back here. What we're going to look at, we're in the southwest corner of Ghana. When we look at that a little more closely, you've got 2 prolific gold belts. You've got the Ashanti belt and then the Sefwi-Bibiani belt. Some of the largest deposits globally have been discovered in Ghana, including the Obuasi deposit at 66 million ounces, Tarkwa at 25, Wassa at 15 million. We're then on the Sefwi-Bibiani belt just to the west of that, and great neighbors along trend from us. You've got the Chirano mine with a historical endowment of 5.5 million ounces, Bibiani at 6.5 million ounces, and then here's that Newmont mine where they've invested that additional $1 billion, sitting at 20 million ounces and growing. So great neighbors along trend from us. When we look at our project in a little bit more detail, again, we've got the Chirano mine and Bibiani mines just to the north of us, about 40 kilometers, 50 kilometers away, sitting at 5.5 and 6.5 million ounces. We then look at our project. It's a large land package sitting at 248 square kilometers in size. We've identified 25 targets to date, of which we've only drilled on 9 of them, and 5 of them make up our resource today. So lots of opportunities for us to, again, continue to aggressively explore across the project. The other thing I'll highlight, and we can get into in a little bit more detail, is the average vertical depth of our resource today sits at only about 100 meters. So the pits that constrain our resource average in depth 100 meters. So obviously lots of opportunity for us to continue to drill deeper, but also along trend, all of our deposits remain open along strike. In terms of our current work program, we are, as I mentioned, in the midst of a 45,000 meter drill program. To date, we've released about 30,000 meters of results across 237 holes. A lot of the focus of this drilling has been focused on resource conversion. So moving ounces from the inferred category into the indicated category. Key reason for that is that as part of the PFS, we need to use indicated ounces. With this 30,000 meters of drilling, we think we've accomplished our goal of converting enough ounces into that indicated category to produce a PFS. So with the additional, call it 15,000 meters that remains, The bulk of that is focused on resource expansion, as well as some deeper diamond drilling, which we think can create a lot of value for shareholders. So the first 30,000 resource conversion, we think we've completed that. That will allow us to produce our PFS. And now we're focused on resource expansion and really growing the overall size of the mineralized footprint, as well as making new discoveries across our project. That being said, within this initial 30,000 meters that we've released to date, we have had some real standout results. Looking here at this hole 301, for example, 204 grams over a meter. That's our highest grade meter intercept ever on the project. I would actually argue that this hole 307 here, which intercepted 3.4 grams over 28 meters, within that almost 8 grams over 11 meters, would arguably be an even better intercept. So yes, resource conversion has been the focus of this initial 30,000 meters, but we have had some really great results that have been within that drilling as well. Just to orient you on the project, again, large land package, 248 square kilometers in size. From the north to the south, you're looking at about 40 kilometers in strike length. I'll just take a second to highlight where the mineralization sits on our project. So what you've got is the main Bibiani shear, which runs to the west of our project. It then continues up past Chirano and the Bibiani mines. And then you get these second and third order splays that you can see coming through our project. When you add up the strike length of all of those splays, you're looking at about 100 kilometers of strike length. So this is another thing that we point to when we talk about district scale exploration and the upside potential of that exploration. We've also then gone and done tens of thousands of soil samples across our project, which again helps us identify a lot of the targets that exist on our property. Going back now to the project, just to orient you, Sewum is our largest deposit, followed by Boin, Nyam, Quachikrum, and Tokasea. All of these deposits do remain open along strike, so systematically stepping out and continuing to chase and drill along the edges of these structures is something we're focused on. We think that that's relatively low risk, simple, near surface way of expanding the overall size of the resource. We then have previously drill tested areas like Arati, Kojina Hill, Naquanta, Sewum South. These are areas where we made some maiden discoveries, did some follow-up drilling, but don't necessarily have enough drill density yet to be able to wrap a resource around it. So in going back to these areas and doing some additional drilling is something that we're also focused on with this exploration that we're doing. We then, again, have a number of additional targets that we've identified across the project that we're working up either by trenching, doing soil sampling, and that we'll look to prioritize in terms of which ones we think are the next best targets to go after. So this is all the kind of near surface, we call it lower risk exploration focus that we've got as part of our resource expansion and exploration program. We then have an opportunity at depth that we're very excited about. So when you look at our project, again, the average vertical depth of the pits that constrain our resource today is about 80 meters, call it 80 to 100 meters. The average vertical depth of the drilling we've done is 100 meters. The pits on average are 80 meters. When you look at that, call it 80 meters of the average vertical depth of 80 meters, and you look at it from a long section on our project and you compare it to Chirano, and you superimpose that 80 meters across our project, and then again compare it to Chirano, which is our closest neighbor on the Sefwi Bibiani belt to the north of us, where you'll see a lot of these greenstone hosted deposits really grow in size and increase in grade is as you start to identify these high grade feeder zones that exist along the Sefwi Bibiani belt. To put this in perspective, Chirano today is mining underground at roughly 800 meters below surface. They've now drilled down to about 1.1 to 1.2 kilometers below surface. So at 80 meters, we've really just scratched the surface, but we have made some exciting initial higher grade discoveries that we want to do follow-up drilling on and that we're currently doing follow-up drilling on. So historically, we've drilled about 45 deeper holes across the project, and we've started to have some very good success with that drilling, and we'll start to get some additional drill results out here in January from this follow-up diamond drilling that we've been doing. Looking here at Nyam, for example, if we look at some of the deeper drill results here, the diamond drilling that we've historically done, 15 drill holes historically drilled. Just to reorient you, these are the pits that constrain our resource today. They average about 80 meters in depth. When we then went and drilled below that, you'll start to see some very nice results. 5.8 over 7, 5.6 over 8, 5.4 over 9, 6.5 grams over 4 meters. So these are the kind of high-grade feeder zones that we're expecting will continue to grow at depth, and something we want to follow up on, and something we have been following up with this drilling that we've been doing at the moment. Moving over to our Boin deposit, we've seen some similar encouraging results from some of the historical drilling that's been done here at Boin. 15 holes drilled deeper here at Boin. Again, for us, deeper is still only down to, call it, 250 to 350 meters, so still relatively shallow on a global scale. But for us, these are considered deeper, and you can start to see where we've already identified where some of these high-grade feeder zones could exist. So we are focused on getting back in here. We've drilled a number of holes here at Boin, and we're excited to start getting those results out to the market in the coming weeks and months. So this is the other piece of the exploration program that we're very excited about, is the deeper opportunity that we can create a lot of value for shareholders. So we won't lose focus on that near surface, simple step out, grow the resource, but then we're also drilling a number of deeper diamond holes, which we think will create a lot of value. So that's the exploration side of the Newcore story. I'll take a couple minutes here just to focus on the PEA and where we think we can create a lot of value through the de-risking process of taking it from a PEA to a PFS. So in 2024, we put out a PEA which outlined a simple open pit heap leach project. The economics at a $3,000 gold price are extremely robust. $971 million of after-tax NPV. It's important to highlight that that compares to a market cap today of roughly $125 million. After-tax IRR of 136%. Roughly a half-year payback, a nice production profile of 122,000 ounces over a 9-year mine life. By taking our project now from PEA to PFS, we think that that will lead to a higher multiple that the market is willing to pay for the company. And that's the re-rate that we talk about in terms of moving the market cap from 125 million today to something much higher in the future. When we look at the project from a cash flow perspective, at a $3,000 gold price, you're looking at after-tax cash flow of roughly $1.3 billion, 140 in year one, 150 in year two, 130 in year three. So we can create, through building this project and taking it into production, a self-funded district scale exploration company and use the significant cash flow that's generated to unlock a lot of that value for shareholders. One really simple way of looking at it is leverage to the gold price. For every $100 move in the gold price, our Enchi project adds roughly after tax US $50 million to the NPV of the project. So we're adding about 40% of the market cap of the company today for every $100 move in the gold price. When you get to recent trading ranges, which aren't feeling so recent anymore, of $3,000 to $3,500 gold, you're looking at an after-tax NPV of 970 to 1.2 billion, after-tax IRR of 140 to 170% IRR. So these economics are one of the reasons we've been able to attract such significant institutional investment into our company. And our major shareholders want to see us de-risk this project to a construction decision as quickly as possible to unlock a lot of the value that we've got within our project, but also not lose focus on that true district scale exploration upside that we've got across the project. So for me as a major shareholder and for the rest of our management team and board, that optionality of true district scale exploration fundamentally underpinned by a project that creates a tremendous amount of cash flow is something that attracted me to the company and obviously attracted our board, management team, and major institutional investors. So with that, Jasper, maybe I'll hand it over to you for any questions that you might have.
Thank you for an excellent presentation, Luke. So I guess first of all, if you could give us some more color on yourself and your career.
Yeah, so my background, as I briefly mentioned, I started my career on the investment banking side of the business, 20 years, looking at the global natural resources funds, the global natural resources sector. Spent 12 years in London covering all the big global natural resource funds out of the UK and Europe, advising different ASX, TSX, London listed companies. When you look at our institutional shareholder base today, a number of those groups and investors are groups that I worked with for a number of years. Africa is a continent that I spent a lot of time focused on and working with companies who were active in Africa. That's one of the things that attracted me to this project is Ghana is a great jurisdiction. It's a jurisdiction that has had free and fair elections for a number of years. And obviously our Enchi project with its district scale exploration was something that I was really attracted to. So investment banking side of the business. And then through my relationships with Doug Forrester, Blaine Johnson, and a number of the board members involved in Newcore, they asked if I wanted to come in as CEO. And when I looked at the project, it was one that I was really attracted to. So that's really when I made the move from the investment banking side of the business to the corporate side of the business and moved in as CEO of what was Pinecrest at the time and Newcore Gold today.
First of all, what's your equity position in Newcore and how meaningful is it to you?
Yeah, so for me, it's very meaningful. I'm the third largest insider of the company, own about 5.2 million shares, so roughly 2.5% of the company. And I think it's important to highlight, I've personally invested over $1 million into the company, and that's all money that I've invested alongside shareholders over the last number of years. My average cost base would be somewhere around 35 cents a share. So it's important to highlight that this isn't a company where the management team and board gave ourselves a bunch of stock at a penny a share and then came to investors and said, hey, why don't you put money in at multiples of that? I've invested hard dollars into the company over the last number of years because I recognize the true value that there is and the tremendous upside that we've got within the project.
Could you give us some more color on how Newcore was founded or history of Newcore and how it got to where you are today?
Yeah, so Newcore and I guess the Enchi project, because we are a single asset project, which is the Enchi project in Ghana, as we've been talking about. It was previously owned by Redback Mining. We did a deal, or our founders, Doug Forrester, Blaine Johnson, they did a deal with Redback to buy the Enchi project, invest $5 million into the ground for a 49% interest in the project. Since then, we've aggressively drilled across the project and obviously really moved it forward. Over time, Kinross came in, bought Redback. Kinross gradually got diluted down. And then when I joined, we actually bought Kinross's direct equity interest in the project and brought in a number of institutional investors at that stage. So that's the quick history of the project. Originally Redback, then into Pinecrest Resources, diluted Kinross down, and then eventually bought Kinross out of the project. And then when I joined about 5.5 years ago, we renamed the company from Pinecrest Resources to Newcore. And that was really to highlight to the market the refocus that the management team and board we're going to have on the project. We obviously rebranded it. We needed new presentations, website, all of that kind of work that needed to be done. And since then, we've drilled over 120,000 meters on the project and significantly advanced it. And we're now very pleased to be in a position where we're going to be able to produce a PFS in the middle of this year.
How much does it cost here to drill all in for diamond and RC?
So for RC drilling, it's about $100 all in. For diamond drilling, it's about $250 all in. That's one of the great things about Ghana is you've got a lot of service companies operating there. As you can imagine, with 5 million ounces of production per year and a lot of mid-cap and major mining companies there, there's a significant amount of mining services companies. So for us, we're very lucky to have access to all those drill companies. Geodrill, for example, is one of the main drilling companies that we use. They sit 4 hours up the road from us. So that's a real advantage that we've got in country.
And this is US dollars?
Correct, US dollars.
And what's the annual G&A?
Annual G&A at a corporate level is about $2.5 million Canadian. So that's all in, including all of our marketing, everything, and what it costs to run a public company. We then, in country, obviously, have G&A there as well. Our view as a management team and board who own 15% of the company, we want as much money going into the ground in Ghana as possible. The way we've also structured the business there is we can ratchet things up very quickly in terms of drilling, but we can then also bring them back down quickly as well. So that's where we've created a structure that allows us as an exploration company to really flourish in good times by aggressively drilling and growing the size of our drill program. But in tough markets, such as what we saw in 2022 and 2023, we can also pull things back and still be in a very strong position from that perspective.
How much money do you expect to spend to get to a PFS? And also if you relate that to your cash balance with warrants coming in.
Yeah, so we've spent a lot of the money that is required to get us to a PFS. And the real reason for that is the biggest cost of going from a PEA to a PFS is converting ounces from the inferred to the indicated category. That requires a significant amount of drilling. In our case, we drilled around 25,000 meters of infill drilling to convert the ounces required. So our goal was to convert roughly 550,000 ounces from the inferred to the indicated category. That would essentially take us from 740,000 ounces of indicated to 1.3 million. And the reason we talk about 1.3 million is if you look at our PEA, what fed our PEA was 1.3 million ounces. So we think with that 25,000 of infill resource conversion drilling that we've now completed, we've achieved that goal of 1.3. So in terms of the biggest cost, without a doubt, the infill drilling is the biggest cost. That is now behind us and completed. The additional work that's required is metallurgical work, some additional environmental work, baseline work, geotech, hydro, and then obviously hiring the consultants to put together the PFS, write the report, do the engineering work, mine design, all of that. So if we look at all those additional items that I've just highlighted there, we are budgeting about $2 million Canadian to complete that additional work.
So essentially, you are fully funded to get to the PFS by mid this year.
Correct. So as I highlighted in the capital structure corporate snapshot portion, as of the end of September, we had roughly 11 million, just under $11 million Canadian in the bank. We then have an additional 9.9 million Canadian that has started to come in from the warrants being exercised. Those expire in about 6 weeks from now. So that cash on hand fully funds our PFS and our 45,000 meters of drilling. The additional warrant proceeds, what we could see that being used for is expanded drill programs, and then starting to look ahead to the work that will be required to get completed on the back of the PFS being completed in the middle of this year.
You're fully funded for the PFS, but I mean, you're a non-revenue generating company, so how are you thinking for the next round of financing?
So the advantage we have, and sorry if I'm saying it again, but with those warrant proceeds that we have, that's bringing in an additional roughly $10 million Canadian. So that will allow us to meaningfully increase the overall size of our drill program, start to look at additional work that's going to be required for, let's say, the full feasibility stage of our, or the next stage, which will most likely be producing a full feasibility study. So we're well funded beyond all of the work that we're doing now in the 45,000 meters of drilling. That being said, on the back of an expanded drill program, additional drill results, if we are getting rewarded by the market, then maybe, later this year or sometime in 2027, we may look to raise additional capital so that we can continue to aggressively drill across the program, across the project. But that will be an opportunistic financing, and it will be because the company's at a much higher valuation than it is today, and that we've been rewarded for the exploration work that we've been doing on the project. But at a base case, we're fully funded for all the work, as well as the additional warrant proceeds will allow us to meaningfully expand our drill program beyond the 45,000 meters.
So what royalties are there on the Enchi project?
So currently the government of Ghana has a standard 5% royalty across all projects in the country. We then have a 2% royalty with Triple Flag. Of that 2%, Royal Gold has a right to buy 1% back. So probably the best way to look at it is Triple Flag has 1%, Royal Gold has 1%, and the government of Ghana has 5%. So about 7% total royalty on the project.
So then how's the infrastructure at Enchi?
Yeah, so the infrastructure at Enchi is really good. It is one of the, again, real advantages we have in Ghana, and one of the reasons we talk about it as a tier 1 jurisdiction. And if you look at our project, again, as I mentioned, we're in the southwest corner of Ghana. So you've got Accra over to the east of us. It's about a 10-hour drive from Accra to our project. As you can see, you've got the coast. You've got the coast right here. You've got deep water ports on the coast there. This is actually the Cote d'Ivoire border that you can see here. And if anybody wants to go onto our website, you can pull all of this up and spin it around yourself and go in and have a look at our project in detail. As I mentioned, again, to the north of us, you've got Chirano, Bibiani, and then we've got Newmont's Ahafo mine. Looking at our project specifically from an infrastructure perspective, we've got a paved road and power line that go right through our project to the town of Enchi. You can drive 100 kilometers an hour along this road. Then throughout the rest of our project, we've got dirt and gravel, primarily logging roads, which give us very good access to our different drill targets. Looking at the town of Enchi, you've got about a population of 15,000 people here. So we've got hospitals, high schools, elementary schools. The other thing that's important to highlight is that we can house all of our employees here in the town of Enchi. So in terms of having to build $100 million camps in the middle of nowhere, we don't have that additional expense. Important to highlight, though, that our project does sit about 10 kilometers as a crow flies, multiple valleys away from the town of Enchi. So it's close enough, but not too close. Looking at our core shack, which sits about 5 kilometers outside of town, we've actually recently, in the last couple of years, doubled it in size, given all of the drilling that we've been doing on our project. But again, this highlights the infrastructure. You can drive 100 kilometers an hour along this paved highway here. We've got cell phone towers, gas stations. When we then look at our project and go to the site itself, again, we've got these dirt and gravel roads going throughout the project. It's important to highlight that this is all second and third generation forest. So this whole area has all been logged. So we're not looking at pristine virgin forests here, which is also important when it comes time to building a mine. But this gives you a good idea of the topography. We've got rolling hills throughout the project. The mineralization typically sits within these hills, which is a real advantage when it comes time to mining. You're essentially cutting the tops of the hills off to ultimately get access to the mineralization. So that gives you a good feel for the infrastructure, and one of the real advantages is the infrastructure that we've got on the project and the good access that we ultimately have.
If you look at your current MRE, which is 1.7, 1.8 million ounces, that's based on drilling up to the end of 2022. How much drilling has you done since, and how do you expect the new MRE to change?
So we've done about an additional 35,000 meters of drilling. As I discussed in terms of the resource conversion, so infill drilling, a lot of that 35,000 meters has been focused on converting ounces. So what we're expecting is to convert a significant number. And again, as I mentioned, our goal is 550,000 ounces of resource conversion. So going from the inferred to the indicated category, we think we have achieved that. We think we might get a little bit of resource growth as well. So stepping out outside of the existing pit areas is something that we've focused on as well. Stepping out along strike is also an area of focus. So our view is if we can have a little bit of growth with our resource update, but really convert the ounces required for the PFS, we think that will be a big win for shareholders and ultimately allow us to produce that PFS. With this additional 15,000 meters and any additional growth in the exploration program that comes with proceeds from the warrants coming in, that's going to be focused on true resource expansion. So growing the overall size of the resource from the 1.7, 1.8 that you talk about to, well beyond 2 million and towards 3 million would be our goal with a bunch of the additional drilling that we're doing.
Okay, that's good. And will you add any new areas, or will it be the 5 areas that's in the updated MRE?
So in the updated MRE, it'll focus on 4 or 5 areas. Again, the real goal is resource conversion. That conversion is focused on Sewum, Nyam, and or I guess probably in order, Sewum, Boin, which are our 2 largest deposits. About 85% of our resource comes from those 2 areas. Nyam's our 3rd largest area. So a lot of the resource conversion is focused on those larger deposits. But then, we've also got areas outside of that, areas such as Aradi, Kojina Hill, Sewum South, Naquanta. These are all areas where we've made historical discoveries. We drilled maybe, call it 2,500 to 5,000 meters of drilling that we'll want to go back to and do additional drilling. Kojina Hill would be a good example of that. As part of that part of this initial 30,000 meters of drilling that we've done, we did put about 1,000 meters into Kojina Hill. We made additional discoveries, and over time, that would be a great example of an area where we think we'll be able to bring it into our resource as we grow the overall mineralized footprint. Typically, the way we approach it is unless we have about 50,000 ounces or more of resource identified at an area, we don't think it's really worthwhile wrapping a pit and adding it to our global resource. So that's the opportunity with those previously drill tested areas, is over time to grow them and bring them into our global resource.
And when will you release the new MRE?
Right now, we've said we're going to release it as part of our PFS. So middle of this year, we'll release the MRE and the PFS together. That being said, we may look at putting out a separate MRE before the PFS. Really, the decision there comes down to it costs an extra few $100,000 to get a consultant and a QP to put together the 300-page report that's required for a MRE to be released. So it's just weighing up, is it worthwhile spending that money to produce a separate MRE from the PFS? So that's something we'll evaluate over the next couple of months.
And so when will do you think there will be a decision point if you extend your program?
Really on the back of the warrant proceeds coming in. So we've already started to see money coming in from those warrants being exercised. And my personal view, and obviously we'll need to discuss with the rest of the management team and board, is that it will make sense to expand the drill program on the back of those warrant proceeds coming in. So, the warrants expire at the end of February. So I would expect sometime, towards the end of February, beginning of March, we could announce an expanded drill program.
So thank you for being here today, Greg.
No, thank you for having me. Very, very excited to be here.
Awesome. So could you tell us a little bit about yourself and about your career?
Yeah, I'm an exploration geologist. So I've been doing this now for over 35 years. And most of that has been within these greenstone terrains. So it's a similar or almost identical geology to what we have at Enchi in Ghana. So most of my experience has been in northern South America or Western Africa, which of course were connected when all of this geology was forming, and everything from grassroots exploration up through the management of large exploration programs with dozens of drill rigs, oversight and involvement in scoping studies, pre-feasibility studies, feasibility studies, and with a couple of companies, looking after the technical aspects on producing assets as well. So real sort of broad experience, but again, most of it directed towards gold, other element, copper a little bit, but mostly structurally controlled gold deposits and exploration for those.
I think it would be a good start to showcase the two major gold belts, greenstone belts in Ghana. So if you could walk through the geologic setting of the Enchi project.
Yeah, so we're here in West Africa, obviously the West African Craton, and what you see on the screen here is a relatively small portion of it in western Ghana, but certainly this is one of the most prolific gold regions on the planet in terms of current resources and reserves and mines and historic production, and this style of mineralization as well is certainly in other areas within the Canadian Shield, within Western Australia and other parts of the world is really one of the largest sources of gold that we've got. In specific to this area in Ghana, you've got the Ashanti Belt, which of course is very historic. This area in West Africa used to be called the Gulf Coast for a reason. They've been producing gold here now for thousands of years, and it includes some of the largest deposits in the world. Obuasi is well over 60, probably 70 million ounces, and even on the belt that we're on. So we're on the adjacent belt, slightly newer, if you will, the Sefwi Bibiani belt, but as well includes a number of active operations, including Chirano, Bibiani, and then the large Ahafo camp where Newmont is currently investing $1 billion to significantly expand their production there. So these are two really well-defined, really well-understood gold belts that, again, have been producing for a long, long time. But I think it's really significant to look at the fact that even though they've been around for that long, you've still got very, very significant resources, reserves, and production coming out of this. And as we see with our Enchi project, you continue to have the opportunity to find new discoveries as well.
Really good. So what I think would be good is to actually go through each deposit. How's the mineralization hosted? What kind of widths are you seeing? And how deep is the mineralization? And other important details.
Absolutely. So yeah, we'll be focusing in on the Enchi project here. You can see the outline of the claims, and again they cover about 40 kilometers of this belt. As I mentioned, these gold deposits are structurally controlled. So we did a lot of work previously, geochemistry, geophysics, to define these. So that's why you see a project now that's long and linear, 40 kilometers long, 10 to 20 kilometers wide, because it's following these second and third order splays that are coming off the more regional Bibiani shear. So this is the big line that connects all of the mines, but the actual deposits are on second and third order structures coming off of those. And again, you can see that with the distribution of our deposits here, Boin and Sewum being the two largest. Those are about 80% of our current resource. But you can see as well Nyam and Quachikrum, so our third and fourth largest deposits, sit along the same structure here. And then we've got Tokasea, which is really an extension of Sewum. But all of these are long, linear structures. Some of them are more complex than others. I think it gets shown really well here at Boin, which is again where we've been doing a lot of drilling, where we released some new results today. And you can see that this is a pretty linear structure. You certainly have within it sort of boudins where you get wider zones and higher grade zones, and that's what you would expect. And these things are open along strike, and we need to do some additional drilling there. You see sub-parallel zones. That's a theme as well. We have that here at Boin. We also have that at our largest deposit, which is Sewum, and this is our most complex deposit as well. So again, some straight lines to be drawn here in terms of some of these zones, sub-parallel zones here. This is a bit more of a complex zone here where we've got sort of crisscrossing structures here. But that's the theme, is that this is all structurally controlled mineralization. So you sort of connect the dots here. And then in the case of the largest portion of Sewum here, we've got a large intrusive body that sits in here. So when the structure goes through there, it breaks up and we get a whole bunch of really close spaced sub-parallel zones, and that what gives us there a nice wide zone. The mineralization there in some cases is almost a kilometer in width when you add all of these structures together. So all of those things come into play. Again, largely structurally controlled, but there's that influence of geology, in particular the intrusive bodies that give us some of these wider zones, which is of course great for building up the tons. And as I mentioned, the zones that we have are really defined by two things: by geochemistry. This is the gold and soil anomalies that you're looking at here, and you can see big kilometer scale anomalies associated with all of our deposits. And then we talked about these structures, and they're really well shown in this airborne geophysics. You've got this big regional structure here that connects us to our neighbors, but where you see the gold is on these second and third order structures coming off of here. And again, this is where our largest deposits sit: Boin, Sewum, and Nyam and Quachikrum.
How many ounces do you have in these deposits, and what's the grade?
Yeah, so it's a total of 5 deposits that make up our current mineral resource that was completed in 2023. We are obviously updating that now with all of the drilling that's been done in terms of that resource. We had 743,000 ounces, and that was the first time we had indicated resources, was in 2023. The majority of it, 972,000 ounces, were in the inferred category, and that's certainly been our focus, is up until these latest sets of results, which were step outs down dip and looking at some higher grade potential. The bulk of the drilling that we've been doing over the last year has been to convert this inferred, the bulk of this inferred mineralization into the indicated category, and obviously that's important for the inclusion of that material in the upcoming pre-feasibility study.
What's the average width of these deposits, and are they all shear hosted in shears, or?
Yeah, I would say shear hosted. Again, structures, you don't actually see a lot of shearing, so they're structurally hosted. So, but think of them as, yes, long linear structures. Here's just a couple of examples here from Boin, and I can sort of scroll through a bunch of these, but you'll see that the average widths that we're looking at are tens of meters wide. It gives you a nice wide zone. Certainly, as with any deposit, gold deposit, the grades are variable. So you're going anywhere from, in this case, a couple of hundred to 3 grams per ton. But certainly, you've got nice wide zones at sort of half a gram to a gram per ton. That's Boin. If you look at Sewum, as I mentioned, it's it's the largest deposit, and that's really driven by the fact that you've got all of these sub-parallel zones. So when you add them all together, you're looking at something that's almost a kilometer wide. We do have other portions of Sewum as well, where again you look at the individual structures there being almost 100 meters wide. We've got a couple of holes in particular where you look at this hole here, and it's the whole hole is 8 meters of mineralization here, 65 meters of mineralization here. So you're looking at about 90% of that drill hole as being mineralized. And then again, Sewum being the most complex, we've got areas there as well where it is a bit more like Boin, where you're looking at sort of well-defined, structurally controlled deposits. This is an area we call the parallel structure, which was sort of identified in some of the later drilling that we did in terms of the RC drilling, but it shows the potential to find these sort of unrecognized structures, that provide some of the upside for the project.
How much of the resource is open pittable?
So the majority of it is open pittable. So in terms of the 2023 resource, we really only had a small portion, 136,000 ounces, that we estimated as underground. So of the total here, when you add the 747 and the 972, it's really just this 136, 135, 900 that isn't contained within the pit shell. So the vast majority of it is all relatively close to surface and pit constrained.
What kind of strip ratios do you have here for the deposits?
So it's a little bit variable, as you saw on those cross sections. Some of them are really wide and multiple structures. Some of them are a little bit higher grade and better defined, but overall we're looking at about a 3-to-1 stripping ratio.
Could you walk through the expansion potential, which obviously you're drilling, you have about 15,000 meters left to release, or drill and release. So walk us through that program and how you're looking to expand the resource and the individual deposits.
Yeah, so as we've seen, there's a couple of different areas, and I'll come back to Boin here. Again, it's probably one of the more easier deposits to describe, just given the sort of real strong structural nature of it, and the obvious places for expansion are really twofold. These zones are open along strike, so we've got areas yet to drill along here, and we've got plans to do that. And then, of course, at depth, again, the average depth of these pits is about 80 meters in terms of the resource. So, that's relatively close to surface, and again, dominated by the oxide and transition materials. So these pits just sort of get into the upper portion of the fresh rock. What I wanted to sort of highlight here is that even in the RC drilling that we did, we expanded the mineralization below the level of those pits, and they included some really nice intercepts. Over here you've got almost a gram over 54 meters, half a gram over 61, 1 gram over 48, almost a gram over 96 meters. So these are the sorts of grades and widths that you need to continue expanding these open pits. And then again, in terms of the latest results that we had at Boin. What we've been doing there is following up on some of those zones. So what these are defining are a series of chutes, and these chutes start right from surface. So you can see that even in the open pits, they've got better grades and better widths than some of the other portions. And again, this is to be expected in terms of the type of deposit that we have here, that you look at these chutes along strike, and they're kind of distributed every half a kilometer or 3/4 of a kilometer. And these are the ones that you're going to then follow to depth with better grades. And that's what we've done now with this recent results. We would just released a set of drill holes, and they include some, narrower, really high grade zones here. So 1 meter at 174 grams per ton. And this sits here on the upper structure here. Sorry. So this is drilled a little bit deeper here. And then the one of the other highlight holes that we just released, 3.5 grams over 23 meters. And this is what you want to see when you're looking for some of this material below the level of the pits. Is you want to see a combination of both nice wide structures at mineable grades, but as well you got some nice high grade kickers in there. And again, those two holes are distributed along these chutes that we've defined. We've drilled some additional holes on these now. We've drilled some holes on this central zone here as well. And again, this is certainly one area where you're really going to be able to build on some of those resources and build on what was a really small, underground resource as part of the 2023 mineral resource. Now we've got more drilling to do here before we define resources, but you look at the fact that the drilling we released today, every hole intersected gold mineralization, so that we're quite encouraged about that. So Boin's our second largest deposit. Our largest deposit is Sewum.
If I stop you before on Boin, what kind of, for underground mining here, what sort of, for that to be economically attractive, what grade do you need on average?
Yeah, well, certainly at today's gold prices, you need less than what you might need. But no, to have a healthy margin.
Okay, assuming, I don't know, $3,000 gold, not today's gold price.
Yeah. So about, you're going to be looking at a cutoff above a gram per ton, maybe approaching 1.5 grams per ton, and then average grades of anywhere from 2.5 to 3.5 grams per ton. And that gives you a real healthy margin there. And then obviously in terms of, smaller portions of the deposit or specific zones, if you're looking at anything better than 4 or 5 grams per ton, then you're really making money at that point.
And what kind of widths do you need to see here for that to be, so you can, what are mineable widths?
Yeah, again, it's going to be a combination. Obviously, if the results that we released today, I think are a good microcosm of that in terms of having both nice wide zones at 3.5 grams over plus 20 meters, and then again having narrower zones at high grades, but including even a little bit of that material in any sort of mine plan. Obviously, if it's just a couple of meters wide, that's not going to generate a whole lot of tons. But combining that with areas where you can go in and start mining nice wide zones that are again potentially plus 20 meters in width, but better than 3.5 grams, then that's the sort of scenario you want to give you nice good grades and a lot of volume.
Perfect. Maybe we could showcase Sewum and where you will be drilling to expand the zone.
Yeah, so for Sewum, even though it's our largest deposit, it's one of the ones where we've drilled the least to depth. And I know I've shown this cross section a couple of times, but I'll show it here again. You look at the zones here, and again some good widths over good mineable grades as we've seen. But you look here, and we're only about 80 meters deep here. You see the length of these holes, 96 meters, 84 meters. So, and you can see that all of this material is oxidized. So for the majority of this portion of the Sewum deposit, which is the bulk of the tons that we haven't actually drilled any deeper holes yet, and we're in the process of doing that now. So as part of the current program, we're drilling deeper holes, and again, for us, deeper being still within a couple of 100 meters, 300 meters of surface, so not super long, kilometer long holes or anything. We are including drilling at Sewum in particular here, underneath the ridge zone, where we really haven't tested the depth potential at all yet. So quite exciting to be putting the first deeper holes into Sewum. Again, very exciting to be able to release these first set of holes at Boin, where all of the holes intersected higher grade mineralization, and as well we're doing some additional drilling at Nyam, which is our third largest deposit, and actually the deposit where previously we had done the most deeper drilling. And so this is Nyam. Yeah, and again, very structurally controlled deposit. If we spin it around, it actually connects to the Quachikrum deposit, which is down here. So this is Nyam, same structure. When you look at it in again, looking at the higher grade blocks within the resource, and when we're looking at these images, that's what we're looking at here. These are the higher grade blocks within the resource. Of course, these are the drill hole traces. This again is the pit that constrains the 2023 resource. And these are the deeper holes that previously we put in Nyam, and we're putting some additional deeper holes in here now. And again, you see some nice wide widths at good underground grades, 7.4 grams over 7.7 meters, 3.2 over 9, 4.8 over 8, 2 grams over 17, 5.4 over 9. And it's important to note that these are all of the deeper holes that we drilled here. So we're not just choosing the better ones. These are all of the holes that we've drilled. And again, similar to the results that we released today at Boin, all of the holes are intersecting mineable grades and widths. Again, a combination of, slightly narrower, higher grade zones here at 7 grams over 7 meters, but as well, things, again, like 1.72 over 20, again, even 5.7 over 7, 5.2 over 1. So the combination of all of these results, again, starting to build a significant underground target.
Excellent. Maybe you also want to touch on Kojina Hill, and is there any other deposit as well that you would like to touch on in terms of resource expansion?
Yeah, so yeah, Kojina Hill is our most advanced target outside of the resources, if you will, and just going back to the property maps again, we've looked at Boin, Sewum. This is Nyam and Quachikrum. Kojina is a somewhat of a sub-parallel zone to the Nyam and Quachikrum structure. It's an area where we've done some drilling, but don't currently carry a resource. We do have to go back in there and do some more drilling, but obviously the drilling that we do now is informed and builds on the previous drilling. And we've got a number of areas like that. I'll note here as well, it's called Kojina Hill for a reason, obviously, because it's a pretty prominent hill, and that's actually a bit of what we see at most of these zones, because the mineralization is associated with quartz veining, and you've got silicification and the veining associated with these. A lot of our zones, I talked about the Sewum Ridge for a reason. A lot of our zones tend to occur on tops of these hills, which is, of course, helps you for stripping ratios as well when you want to go mine this thing. But yeah, this is Kojina Hill. This is just some of the recent previous drilling that we've got, but it sort of shows you again the nice deep oxidation that we have here, good grades over nice wide widths. In this case, we've got again starting to see some of this higher grade material as we get into the fresh rock, but it's completely open for expansion. So we've you can see back on the plan map, we've got an area here of previous drilling. We've got some good results here. We did these big step outs as part of the last campaign, and now we've got to sort of fill this thing in and build a resource. But this is one of the most advanced targets, the most advanced target that we have outside of our current resource. And when you look at all of these zones, Quachikrum is another one. So this is our fourth largest deposit. Again, it is right along the same structure as Nyam. But these things are completely open along strike. We just haven't done any drilling here. The gold in soil anomalies continue. It's open to the north. And in the case of Quachikrum, again, we've really done pretty shallow drilling there. But, again, good mine widths and grades associated with it. Decent oxidation here. Not as deep as we see at Boin and Sewum, basically our two largest deposits have the deepest oxidation. But all of these sort of add to the potential for both additional oxide material near surface, and then again in terms of today's news and the drilling that we're doing now, following these high grade shoots to depth.
How much of the resource is in oxides, and how much is transitional and fresh rock?
Distributed again by the indicated and the inferred. You can sort of see within the oxides, you've got 460, you've got another 540 in the transition material, and then about 700 in the fresh rock. So about sort of 30%, I guess, in the oxides, another 30 in the transition, and about 40 in the fresh rock. And like I mentioned, we've got areas where we continue to expand on the oxides and transition material, which is oxidized, a little bit harder. And then again, in terms of the long term, where we see the potential is to continue adding some ounces and some grade with the higher grade fresh rock material.
Could you give some sense of the metallurgy here and how well fresh rock and transition, what recovery rates you get for each of these types of rock?
Yeah, so we've done quite a bit of metallurgical tests overall. And this is actually a bit dated now, but well over 400. In terms of, again, the oxidized material, it is what you would expect it to be. Nature's done a lot of the work for us there, so you get high and fast recoveries of the gold. We don't have any sort of elements that get in the way. That the gold, as I mentioned, is associated with quartz veins and a little bit of pyrite. So we're looking at pretty typical mineralization. Again, we've got the advantage of having nearby operations. Chirano being the closest one is just up the geological road from us, and in general, as I mentioned, on the planet, these types of greenstone hosted, structurally controlled deposits have been relatively straightforward metallurgically speaking, and continue to be one of the largest sources of gold production.
Perfect. So with that, what do you think the size of the prize could be here?
Yeah, I mean, we talked about our neighbors, and we include this slide in our presentation. It talks about all of this drilling that we've done at our deposits, and again, in terms of the fact that our pits are only averaging 80 meters deep, that we've just now started drilling below the level of those, and then we compare ourselves to our neighbors at Chirano, who also started with a whole bunch of 13 shallow open pits, but where they've been mining now for the bulk of the last decade is following just a small number of these to depth, and again dealing with those sort of grades and widths that we saw in the results that we released today, and Chirano is a +5, +6 million ounce deposit. We're certainly not there at this point, but with some additional work, we look to prove that proof of concept.
And what work is needed or remains to be completed for the PFS?
So a lot of the work has either been completed or is near completion. So the additional items beyond the infill drilling, which we've talked about, I think, in enough detail, we've got some additional metallurgical work that's required to take us from a PEA level to a PFS level. So that's ongoing. Additional geotech and hydrological work. A lot of the drilling for that has been completed, but now doing the testing and analyzing the results from that is something that is being completed at the moment. We're also doing additional environmental and baseline work. So wet season, dry season, wet season, dry season. That work's been ongoing for the last couple of years. We just completed an additional set of tests in Q3 of last year. So now putting all that together to then feed into the PFS is ongoing work as well. And then, the additional, I think I talked about geotech, hydro work. So all of that is ongoing and will feed into the to the PFS. So the bulk of that is completed or near completion. And then really it's engaging the consultants to start pulling all of that together, mine planning, and then incorporating all of that into the PFS that we're looking to get out middle of this year.
So could you explain the flow sheet and also recovery rates that you're getting, or at least per the PEA?
Yeah, so for the PEA, we had 82% or 81.8% recoveries is what Lycopodium used. That was looking at a bunch of the historical metallurgical work that had been done. One of the things that we are doing at the moment as well is a bunch of trade-off work. If you look at our PEA, we used a base case of $1,850 gold, which I'm sure a lot of people who are listening to this shake their heads that in 2024, those were the types of gold prices that were being used. Obviously, fast forward to today, we're in a completely different gold price environment at, $4,400, $4,500 gold. Things really change in terms of how we may want to process the material for our project. One of the things from a trade-off perspective that we're looking at is, heap leach versus CIL. When you look at our, call it low to mid 80 recoveries from a heap leach, which were used in the PEA, and you look at a potential CIL scenario where you could get low to mid 90% recoveries, that potential extra 10% recovery in a $3,000 gold price environment, let alone a $4,000 gold price environment, can be very meaningful to the overall economics of the project. So that's something we're evaluating and doing a bunch of trade-off work and really optimization work internally to look at, okay, is there potentially a better flow sheet or processing scenario that creates even better economics for the project? So that's something we're evaluating at the moment. But again, the PEA outlined a very simple open pit heap leach operation, which outlined very robust economics. Our view is if we can optimize and do some trade-off work that creates better or more certain returns for shareholders, then that's something that makes a ton of sense. And again, for us as 15% owners of Newcore, it's something we're very keen to investigate further in today's gold price environment.
So obviously that is something that could change in the PFS. And what else do you, in terms of, cost, production, other things that could change in the PFS compared to PEA?
The advantage we've got of having produced the PEA in 2024 is that a lot of the cost inflation that the sector saw was on the back of the global COVID pandemic. We saw significant inflation in the mining sector, and I think all sectors globally in 2021, 2022, 2023. 2024, things really started to stabilize. And if you look at the all-in sustaining costs over that period for the industry as a whole, for the mid-caps, the majors, we saw increasing costs, between 2021 and really 2024. Since then, we've started to see things really normalize and stabilize a lot. So, we're not expecting to see meaningful cost inflation, especially the kind of inflation that you saw prior to 2024. So that's one of the real advantages we've got is we've got a recent study that had costing that we think will be in line with what we're seeing today and with what we're expecting to have in the PFS.
So I guess the next step is to initiate the feasibility study post PFS.
Yeah, so if we get the economics that we're expecting with the PFS, then it would make sense for us to fast track this to an FS, to a full feasibility study, and ultimately get to a construction decision as quickly as we can, and then into production. So that would be, what I think will be the logical next step. Obviously, we'll speak with our major shareholders on the back of the PFS. We'll discuss it, with the investment banks and others that we work with, and on the back of that, we'll make a decision. But based on, the work that was done in the PEA, all the work that we're completing at the moment, my view is that fast tracking to an FS and ultimately getting this project into production as quickly as possible will create the most value for shareholders.
Do you have any timeline if you would go fast track it, in terms of permitting and also in terms of actually doing the feasibility study?
So from a permitting perspective, on the back of completing the PFS, we'll apply for a mining lease and environmental permits. Those typically take 9 to 12 months. We've got a very good working relationship with the government of Ghana, as well as the Minerals Commission in Ghana. So we've already started working with them and highlighting the project that we're looking to put into production. So on the back of the PFS, we'll look to submit an application for the mining lease. And again, 9 to 12 months, we'd expect to get that done. In conjunction with that, we would look to complete a full feasibility study on the project, which would then take, around 12 to 18 months to complete that. So we would look to be at a point where we can make a construction decision and ultimately be in construction in 2028.
What is the construction period here?
The PEA outlined 15 months to complete the construction.
Okay, that's good. And how are your local community relations?
We've got good relationships with the local communities. I mean, we've been working in this area for about 15 years now. We've got our country manager who's been working on this project on and off for the last 20 years, so has built up very strong relationships with the local communities. The individuals who head up our ESG team are both from the town of Enchi, so have deep relationships within the communities. We're also one of the biggest contributors from an ESG perspective to the town of Enchi and some of the local communities around our project. So with that, we've obviously ingratiated ourselves with the community. And probably the biggest thing we get asked from a community perspective is, when are you going to get this project into production? Because obviously they recognize that producing companies hire a lot more people and can provide a lot more for the local communities. I mean, when you go around Ghana and when you go around any country globally where they've got a established mining sector, you'll see that typically the communities where there's a mine close by are the ones that are doing the best. And Ghana is no different. So our local community, Enchi, it obviously recognizes that as well and are keen to see us get this project into production as quickly as possible because of the benefits that it will also provide for them.
Do you think it's more likely that you or someone else builds the Enchi mine?
Well, I think one of the real advantages we've got at Newcore is our Enchi project is a project that we can build. Yes, we would need to bring in, additional team members and additional expertise to be able to take it from a PFS, FS into full production. But, it's a size and scale of project that a company like ours, with the backing of the institutional investors that we've got on the register today, that we can put into production. So it's a real advantage that we've got with our project. And, there's a lot of projects similar to ours across West Africa that have been put into production by junior companies like us. So we're staying laser focused on putting this project into production. As you would appreciate, and others who follow the mining sector, often once you get a project to a PFS or an FS stage, that's when other companies come along and want to buy the project. So, without a doubt, our expectation is that we're going to see a meaningful increase in interest as we take this project to a PFS and then an FS, and ultimately get it closer to production. Our job is, if someone does come along and wants to make a bid for the company, is that, the share price is at a level that shareholders are rewarded if that is the eventuality. And ultimately, my job as CEO, or one of my jobs as CEO, is to explore those opportunities. And if the management team and board think it potentially makes sense, then ultimately take that to our shareholders, who are the ultimate decision makers as to whether they want to sell the company or not.
What type of companies could be interested in the Enchi mine?
Oh, I mean, there's a long list of potential suitors for the project. I mean, if you look at, again, West Africa or Africa as a whole, if we look at recent M&A, you had Osino, which was taken out by a Chinese group, which ended up being a full-on bidding war. Similar with OreCorp, which was at a feasibility stage. That was, again, a full-on bidding war between Perseus and Silvercorp. More recently, Predictive Discovery, if you follow that one, which is a Aussie-listed explorer, took their project to an FS. And then there was a bidding war again between Perseus and Robex. So, the Chinese have been very active, but then, if you look at our project, 120,000 ounces of production over a 9-year mine life, that's a very attractive project for any single asset or maybe 2 asset producing company. And then if you layer on top of that the true district scale exploration upside that our project has, that's when you start to attract, the mid caps and majors who are looking for that huge upside potential that potentially exists within our project as well. So you put all of that together, it's a long list of potential suitors.
If you would finance this, you have give at least per the PEA roughly 100 million USD capex, probably a little bit more the PFS. How would you finance that, or what financing alternatives are probably the more attractive ones?
Most likely a combination of debt and equity would be the logical way to finance the project. We have also, that being said, seen some very attractive streaming arrangements that other companies have done. So that would be another alternative. When you look at, 100 to 125 million to finance the project, that's a very attractive size of project and funding package for a very long list of financiers out there. From, there's a lot of development banks who are very active in Africa, and we've seen a number of them fund mining projects. But then your traditional banks, as well as your private equity groups, could be very interested in funding the project. The approach we would ultimately take when it comes time to funding the project is you explore all of those different funding packages, and then ultimately come up with what's the best cost to capital with the least number of restrictions on what we can do from a operating company perspective. So that'll be the approach we take. But one of the real advantages we've got is, again, when you look at our 55% institutional ownership, from an equity perspective, our major shareholders have already expressed interest and a desire for us to get this project to a construction decision so they can help fund it at that point.
Awesome. Could you summarize the key catalyst for this year?
So for this year, obviously drilling is a big focus for us. One of the things that we've talked about and that I'm very excited and the rest of the team's excited about is we're now back to focusing on pure exploration drilling. We've got, diamond drill rigs turning at the moment, which are focused on some of those higher grade structures that we've identified across our project. We've started to get a bunch of those results back, which we're keen to get out to the market, with the first set coming out in January. And then if you look at our historical drilling, typically every month or 6 weeks, we will get a batch of drill results out. So lots of news flow from a drilling perspective in the first half of this year. With the additional warrant proceeds that we're expecting to come in, I could see that leading to an expanded drill program, which would then allow us to drill right through 2026 and into 2027. So continued news flow from a drill perspective. Commissioning of the PFS is something that we'll look to get completed in the next month or so as well. And then the big catalyst that I still see is releasing that PFS in the middle of 2026. If you go back to 2024 and look at the impact that the PEA had from a shareholder return perspective, it was a meaningful impact. We saw a very strong move in the share price on very strong volume on the back of the release of the PEA. And my view is de-risking this project from a PEA to a PFS, and the multiple that the market should attribute to a PFS stage project is something that can create a lot of value for shareholders as well. So that would be one of the major catalysts this year as well. And then beyond that, obviously looking at an FS, looking at, applying for mining leases, environmental permits, all of those elements are, de-risking milestones that we think can create incremental value for shareholders.
So with that, where do you envision Newcore Gold in 2 years from now?
In 2 years from now, I would envision that we're at a construction decision and putting the project into construction with the goal of ultimately putting it into production. I'm not naive to the fact of between now and 2 years from now, as we take it to a PFS, as we continue to make discoveries, as we add ounces and grow our overall resource, completion of an FS, those are all, elements that will create a lot more interest from a potential acquirer perspective. So yes, us putting it into production and starting construction in 2 years from now is the focus and where we think we can create a tremendous amount of shareholder value. But between now and then, our job is to continue to re-rate the stock, get the market cap up, create value for shareholders so that if someone comes along and makes an offer for the company, it's at a stage where we will be able to take it to shareholders and let them decide whether that makes sense or not.